Okay, DeLynn, I did everything you told me to. I'm ready to buy the new house, and you told me to get all my bills together. So I got them all right here for you. Okay, so I got my Verizon bill here for you. I got my Allstate bill for my car insurance. And look here, here's my, what is this bill? Doesn't matter, you need it, because you said you need all my bills. And look here, this is my tax bill for my property taxes on some other place I didn't have. And don't forget my electric bill, my Duke Energy bill. And then we got Allstate, we got this for the accountant, we got this. And look here, this is the Tampa Bay Lightning bill. We got that too. And then this is for the lady down the street who cleans my house. I got that bill too. And
that's
then
a heck of
it. I got my X-ray zone. We needed that bill too. And we got
you got like more bills than we need.
But this is from my doctor. You said get all my bills.
No.
Hear me out. This is from Frigidaire. We got that one too. We got that one. And then all my dentist bill, and then my cleaner bill, and then there's the lawn guy, and we get the lawn sprayed too. And we got all of this. Did you want in my bank statements?
Wait, that's your AARP bill.
I'm not in AARP.
Coming soon.
Oh, and this is from Florida Capital Bank.
No. I don't need all of these bills.
You said, though, to get pre-qualified to see how much loan I would qualify for to get all my bills together. So I did exactly what you told me to. Did I give you too much? What?
Not quite. We are talking about what it takes to get pre-qualified for a mortgage coming up.
Did all this. Hello, everybody. My name is Barry Horvath, and this is Moving Forward TV, your local market update.
And I am DeLynn Gaston. Thank you for joining us today. What a stack of bills you have there.
I just did what you told me to.
Sure glad they're not mine.
I'm not saying a word here. We got to show it.
You got to admit that was funny.
So, yeah, I wanted to get pre-qualified, so she said, get all your bills together. So maybe...
Not quite what we mean when we say to get all your bills together. But actually, that's not too far off.
Oh, really? So
what we kind of wanted to go over today is some of the things when you are getting pre-qualified for a mortgage, people sometimes are not sure what counts and what doesn't count.
Oh.
What do they need to tell us about and what they don't need to tell us about.
Wait.
Basically tell us everything, but.
So you mean I did all this for nothing? Do you know how long it took me to get these bills together?
I know. Basically, the key is talk to your mortgage professional first because they will guide you on exactly what they need.
But you said get all my bills together.
They'll narrow it down.
So maybe
so you don't have to have this entire stack.
So maybe we don't count the Tampa Bay Lightning against my debt ratio?
Correct. That would be an optional kind of a thing. So yeah, you don't necessarily have to have the Tampa Bay Lightning.
You probably should open this.
Would you?
Wow, there's tickets in here.
Anyway,
can we write this off too?
What is needed and what is not needed when it comes to qualifying somebody for a mortgage loan? How much, and when I'm talking to people, when they come to me and they say, well, my realtor sent me to you, I don't know, I need to know how much I can buy. How much house? Here, I have this money, I have these bills, how much house can I buy?
Okay, figure it out. Here's my bills. Go for it. I'm ready. I'm ready to buy. I brought you my bills. I don't understand.
Your mortgage professional will give you a list of stuff that they need to see from you. Not that big of a list, but they're going to ask you for certain things. Some of the things that a lot of people think that we need is, what my electric bill is and what my car insurance bill is and things like that.
So I don't have to pay those anymore?
I
love this. I can't wait to get a new mortgage.
No,
Did you hear that? My mortgage professional just said I no longer will have to count my insurance bills or my electric bills.
This is a perfect
bill.
example of a female. Just going along with what I'm about to say, the producer's a male. So what a female says, what a male hears.
Okay.
I said we don't necessarily need all of those things. I didn't say don't pay them, did I, ladies?
I didn't hear nothing.
Just seems to be what they heard. Anyway, the things
clearly
that are,
the producer's on my side.
No.
yeah, don't hear that.
No.
All right, so the things that you hear and the things that we really need, the things that count into your debt ratio are.
What?
Shall we talk about that?
Yes.
The things that are going to count into your debt to income ratio.
So we want to go over our list now.
We want to go over the list now. See, we have notes. He just never follows them.
Fine. So what do we do with these bills?
So the bills we're going to hold
Excuse me.
aside for right now.
Somebody come pay these, please.
So out of
them off my
these,
desk.
if there's pay stubs in there and W-2s in there and tax returns in there, yes, those are going to be the things that we're going to
They
need.
might be in there.
As far as your income goes, let's start with the income first. What the mortgage lenders are going to be looking for is your gross income. This is before taxes. I get that
So-
question all the time.
But I have a lot of people, yeah, you get that all the time. And they call you up and they say, my income is gross. So
No, and a lot of times people get confused, and I don't blame them what net and gross is.
listen to me. That was funny. You totally missed it.
I laughed.
All right.
They say to me, well, she brings home, if I'm talking to the husband
don't
or
care
talking
what
to the
they-
wife, right? They bring home, $800 a week or whatever. And that's not
We
what
don't
we
care
need.
what they bring home.
We don't care what your take home is.
We care what your gross is. And we
Right.
don't care if it's gross.
Well,
It
we
just-
care what you bring home, but
yeah, we do. We can't get you a pay raise, though, clearly. So basically, there's formulas out there that everybody has to use in today's
Right.
world, because the days since Dodd-Frank passed that wonderful little act that, came out in
All of the new-
2011.
right. All
So
of the new rules for mortgage lending.
Basically, everybody has to prove income. So if you think that now you can just show up, put fog on a mirror, and not, it doesn't matter. It matters what's on your tax returns, what's
Right.
reported. So
And whether you're self-employed or you work for someone, obviously if you work for someone, you get W-2s. And pay stubs, and they take out taxes and things like that. We will need tax returns, W-2s, pay stubs, showing all of that. On the self-employed borrower, you don't a lot of times pay yourself a weekly salary where you take out taxes and such.
Which is gross in itself.
Right. So what we're going to do is look at the tax return, and it is going to be the after you have taken off all of your things that you can nicely write off for the government.
Yep.
So it's going to be the effect, your adjusted income after all of your write-offs and such. So just keep that in mind. So what we're going to use, though, is the gross income. That is the before on somebody who is self-employed, before the taxes.
Before taxes, before 401k deductions,
Right.
before healthcare costs, before all those things, your gross income.
Right.
That's it. Okay, so now...
On a monthly basis.
Yep,
That's where you
before
start.
your taxes. And now we have that base. Now let's talk about what are we going to deduct?
Right.
What actually counts? So since clearly I brought all these for nothing today, I spent all night putting these together and I didn't need them. So, So let's talk about what is going to count against your actual debts
Into your
that
debt
do
to
count.
income ratio.
So since we know now the water bill doesn't count and we don't have to pay it anymore, and the electric bill, we don't have to pay it anymore. Those don't count.
Please keep
Your
on paying
insurance
them
bill
because
does
they
not count.
haunt you if you don't.
Yes, but what does count are, number one on the list is car payments. Probably maybe the biggest debt that you'll see out there.
Right.
So if you're driving that Mercedes and didn't put any money down, you probably got a big car payment. And that could affect how much house you're going to be able to afford into your debt ratio.
Now, whether it's a car loan or a car lease, it is still going to count into your payment. So any kind of car payment that you might have is going to count into your ratios.
And if you co-sign for someone,
Right. This is a good point.
your child, you wanted to help them out.
That's not in the notes. He said that by
That's
himself.
because I do have a little bit of a brain. That can count against you too, but it could be offset if they are paying it themselves and you can prove it.
Right.
So keep that in mind. So if you
And
co-sign,
again, basically tell your loan officer about everything so that they can let you know what to do to document that kind of
because they're
situation.
gonna find out sooner or later. All right.
Yes.
So next on the list are another big debt, especially for our doctors. and
Another
attorney
really big
friends,
debt.
Student loans.
Student loans.
student loans.
Sometimes they can be really big. If you've consolidated them, that's great. Other people haven't, but they're going to count all of the student loans into your debt to income ratio. Now,
you know what? I heard an interesting
deferred,
stat, and I don't want to. Yeah, you can talk about deferment. Go ahead. That's more important.
If you're deferred,
because I have
your
useless
student
information.
Sorry. The student loan debt will always count unless it is deferred. If it is deferred, it has to be deferred, and there's different types of programs out there and such. But talk to your loan officer. If you are still in school and it is deferred for 6 months after you get out of school, if you're still in school and going, we have to get transcripts. We have to get documentation and letters. Again, your loan officer will be able to guide you. But student loan debt does count.
Now, can I give my useless information?
Now, go ahead.
So they say now this will probably be the first generation that actually passes student loan debt on to the next generation because the student loan sizes are so large now.
Is that right?
Yeah, so that's kind of scary. So yeah, you might want to save for college ahead of time so you don't, when you buy a house later, yeah.
Bright futures for us, the Florida viewers out there. We got this awesome thing, Bright Futures. Make sure your kid does his volunteer hours. Make sure it's on the list.
Yeah, think
Make
about
sure
it.
there's
Or your
a lot
kids
of,
are going to take on your student
You
loan
don't know
debt.
about Bright Futures? Google it.
All right, next on the list are personal loans. So if you have any kind of personal loan that reports on your credit, you must disclose it. That does count as your debt.
Right. Personal loans for banks or rooms to go, all those kind of things, loans that you have had.
I think we have a statement in here for rooms to go.
The other one.
Yeah, it's right here.
Rooms to go.
By the way, the payment is due.
Yes. The next one is credit union loans. A lot of times people think that their credit union loan or their they have a loan through their, gets automatically taken out of their pay stubs. I do see people say this a lot. Don't say it.
I'm not saying a word.
Where it comes automatically out of their paychecks. Oh no, that's through my company and they take it out of my paycheck automatically. It doesn't count. Yes, it does. Yes, it does.
So
any kind of loan payment at all that you have, all loans.
Yep. So which is next on our list, any type of loan payment.
Any type of loan payment has to be included.
They do count against you. Now, the next one on our list is credit cards. Now, believe it or not, DeLynn doesn't care how much you pay a month on your credit card. Well, I care, but but it doesn't count in your debt ratio just because you're paying $100 a month on your credit card, but the minimum payment is say $25. All that counts in your debt ratio will be the minimum payment required. So whatever that lists on your credit or your statement, that's what they count, not what you actually pay.
Exactly. So when you're talking to your loan officer, they're not necessarily going to be as interested in, well, I only owe, $2,000 in debt or something like that. What we're really focusing in on is what the monthly payment is on that. So we really need to know what the minimum, as Barry said, what the minimum monthly payment is. The other thing, keep in mind, even if,
People ask you this all the time?
All the time, people say, but I'm going to be paying that off. But I'm going to be paying that off. But I'm going to pay it off. If it's in place the day that we're doing, then it's absolutely going to count. It's going to count. And some people will say, well, I pay it off every month. I'll buy something on credit and then I pay it off, and then I buy something on credit and I pay it off. I pay my balances every month. Because of the way credit reporting works, the creditor, let's say it's Target, reports to the credit bureaus once a month. So even if you buy something at Target on your credit card and then you pay it off as soon as the statement comes in, because it was on there maybe the day it was pulled, it's going to show up. So that isn't always necessarily a guarantee that it isn't either. If your debt to income ratio is tight, don't use your credit cards for a little while.
Yeah, you might want to wait when you're buying a house. So.
Hold off.
All right, next biggie one for some of you boys and girls, it can be really big, is alimony and child support.
Yes. That does count as well. So please be upfront with that as well.
So if you are divorced, you are going to have to present your divorce decree. That's going to show. They may ask for stubs, proof that how much you're paying each month. So.
Right. So in a minute, we're going to be going over the numbers on how this looks on a sample so that we can show you guys how to derive what can I afford for a monthly payment. We will be right back.
No, we won't.
No, we won't.
We're going to stay. All right. Well, welcome back, everybody.
I can't see that far. I thought it said go to break.
We're going right into it. Let's do
on
the
the
breakdown
previous
here
one.
on the monthly income and how it rolls, okay? So
That's kind of involved, though, for
Yeah.
a minute.
Hey, Mr. Producer, can we take more than a minute here? He says yes.
He
Sure.
says yes. All right, good.
So let's go right into it. So we're going to take a basis here with a monthly income of, say, $5,000. Can we get that up on the screen, maybe? That might help.
He's going to try, I think, and put that up there.
Okay. All right. So in the meantime.
Maybe not. Here we go. Okay.
Anyway, all right. So we have a monthly income of $5,000 coming in, which is your gross income.
Right.
And then underneath it, notice we have all the deductions we just talked about. What kind of car loan is
So
that
let's
for
assume the
$350?
person has $350 a month in a car payment.
Is that a G37 convertible by chance on the car loan?
They got $125 in student loans, $100 in
Minimum payment on
their visa, right?
And what's a Target card?
Target, Target. They shop at Target, and it's about $35 a month. So their total debts
$610.
okay.
Now,
Per the new mortgage rules, it's called QM, Qualified Mortgage Rules, the
Yep.
maximum debt ratio that is allowed is 43%. So what your mortgage loan officer is doing is they're taking the $5,000 gross income, multiplying it by 43%, which leaves you with $2,150 to go towards your
allowable
debts.
maximum debt you can
Right.
have each month.
And people will say, well, how come they're only allowing, I get $5,000, how come they're only allowing me $2,100 to go towards my bills and stuff?
You have to have money for your electric bill and your water bill
Yes!
and your insurance bill that
Ding, ding,
apparently
ding, ding.
you still have to pay.
And the taxes that they take out of your pay, your FICA
Exactly.
taxes, your Social Security, your withholding, and all that
Yeah,
stuff. So
yeah.
that's what comes out. Okay.
So and then after that,
So after we
basically-
have the $2,150, which is what is left out of your 43%,
Yep.
they're going to subtract out the $610, which leaves
was
us
all your
ta-da!
car loan, student loan, Visa card, Target card, total debt $610. So if we minus that from the $2,150, you get ta-da.
Ta-da!
Ta-da! You
Ta-da
have
again.
the total amount left over to not
To make-
exceed your 43% debt ratio is $1,540.
So that is what you will qualify for. I always say to people too, what you qualify for and what you're comfortable with,
Right.
sometimes are two different things. So in this case here, this person here, what they qualify for is $1,500. Maybe all they are comfortable with is $1,000 a month though. So make sure you talk to your loan officer about that. What you qualify for and what you're comfortable with sometimes are two different
And
things.
remember, that $1,540 number is your total mortgage payment, which would
Right.
include taxes,
taxes and your insurance and everything else.
and your HOA fees if they apply.
Right.
So that's the easy way to figure it out. But,
Right.
I mean, it's not rocket science, is it, DeLynn?
No.
Oh, okay, good. All right, are we going to break now?
We're going to break now.
real?
Now it says we got to go to break.
All right.
We'll be right back.
Everyone's story is different, so why be limited to just one or two options? With Norcom's Norflex Home Loan, you're given the flexibility to tell your story. Pick your terms from 8 to 30 years, all while maintaining a low, fixed mortgage rate. You can pay off your loan more quickly or choose a term based on your budget and timeline. Whatever you do with the Norflex Home Loan, make it part of your financial plan. Norflex, short-term, long-term, your terms. Apply online at norcommortgage.com.
This is one bee that loves going to the dentist because it's made for you and me.
My name is Dr. Becerra from New Tampa Pediatric Dental, providing a comfortable atmosphere in early dental care. Gives kids a great start for healthy teeth and gums for life.
When I go to Dr. B, they don't do anything to hurt you.
I used to be afraid, but I'm not now. I'm not afraid of the dentist anymore. I love to see Dr. B. Call New Tampa Pediatric Dental today.
Revolutionary in his field, Dr. Bonatti created, perfected, and patented the Bonatti spine procedures. Using his genius, Bonatti invented precise tools necessary to minimize surgery, scarring, anesthesia, and recovery. So successful are the Bonatti spine procedures, they consistently reflect over 94% patient satisfaction. 45,000 successful procedures have been performed exclusively at our location. Nearly half our patients suffer from failed back and neck surgeries at other facilities. Bonatti succeeds where others fail.
Mortgages don't need to be complicated. At Norcom, we're here to guide you through the process. By following our tried and true path to success, we make homes happen. To get started, give us a call or apply online. A trusted mortgage consultant will reach out to you to find out what your goals are. Whether you're in the market to purchase a new home or refinance your current home, we are dedicated to helping you achieve your goals. At Norcom, we'll provide a best-in-class customer experience. Once a plan is established, your mortgage consultant will analyze your income, assets, and credit profile in order to customize a plan for you. If you're planning on moving in the next few years, we might suggest an adjustable rate mortgage to be the best option for you. If you're a veteran, we'll get you started on a VA loan with 0% down. And if you're thinking long-term, a 30-year fixed loan might be your best fit. Our professionals are up to date on market trends and will help you make the best decision in choosing your rate. After we've found the program that's best for you, we'll then need to collect some information, including pay stubs, bank statements, and tax forms. Our underwriting team steers a loan through the approval process to verify that all the information you've provided is correct. As the underwriting process is taking place, an appraisal is ordered to determine the value of your home. A professional, local appraiser specializing in your area will determine the home's value. The last leg of this journey is closing your loan. While taking care of any last-minute details, our closing team will work on scheduling your closing date and location. It's that simple. Thank you for taking some time to walk through the mortgage path with us. Remember, we're always here to answer any questions you may have. It may seem intimidating, but here at Norcom Mortgage, we make homes happen.
Okay, we are back.
Yes, we are.
Did you pay that Tampa Bay Lightning bill? I'd really like to go.
I really want to get season tickets. a little on the pricey side, but I would love to get season tickets.
Look, it says on the screen.
I'm going to get season tickets to the...
DeLynn Gaston, you're a mortgage expert.
Oh, I am.
Wow. I can't wait to see what he puts up there about me.
I want to get... Somewhere in here
look,
is
I'm
my
a mortgage
tickets to
expert too.
Somewhere in here is the tickets to the Tampa Bay Storm. That's fun. If you guys haven't been to those games, that is so much fun. Arena football.
All right, now back to seriousness.
Okay, so back to mortgage stuff. I know.
I love it.
Talking sports, no less.
Go figure. Talk about something she knows about. She knows about arena football. God knows
It's fun. If you haven't been to an arena football game, you have to go. It is a blast.
Well, we can't talk about
because
the Bucks.
it's not the season right now.
Because the Bucks don't have a team this year. Well, they do. They're so close.
And they're not as much fun.
They're the best losing team ever. Anyway, so let's talk about the markets. Now we talked about this debt ratio, how much you're going to qualify for.
Hopefully we cleared up that.
There's a lot of volatility going on.
Yes, there is.
In the whole markets right now. So, and part of it, and people say, why is that happening? Why is that happening? Well, if you guys remember, we did a show a couple of years ago on QM3, was basically where they were
Stands
pumping.
For qualified mortgage.
Yeah, well, actually it doesn't.
Yeah.
It's quick money 3.
Yeah, quick money 3.
Basically, the federal government was pumping money into mortgage-backed securities.
Right.
In billions. I mean, it was supposed to stabilize the market, which obviously it helped. But last week, they stopped. It ended. It's like, no more. So
robbing Peter to pay Paul.
Yeah, they stopped printing money.
Peter ran out of money.
So what happened was, when those mortgage-backed securities aren't getting funded by the government anymore, it created volatility in the markets. Now, ironically, the rates did go up. And they've come back down. So you're going to see some volatility right now till this market stabilizes. So if you're looking at a house, you like these low rates. I mean, they're here. I don't think they're going to go through the roof or anything, but we did hit lows last week. Now, this week we're at the monthly high because that QM3 is over. So keep that in mind if you're out house shopping. You might want to, if you get under contract with your loan originator, if you see the rate you like, you might want to lock it in up front. So just, word to the wise of what's going on in the markets. And I think, the real estate people want to know that out there.
And the markets in general, it's definitely volatile. fact based on theory. Unfortunately, there's a lot of overreaction that happens sometimes.
You think?
And yeah, there's absolutely kind of no control
There's
over
always
that.
that.
The markets are kind of like guessing what's going to happen, so they react based upon what they think might happen in the future. So volatile. So like Barry said, lock it.
Just good information.
Yeah,
Lock in your rate. Be comfortable in that payment, because what you qualified for at 4%, you may not qualify for at 4.5%.
Right.
So remember, that rate does affect what you're qualified for. So just want to throw that in there.
And they can't lock, by the way, until you're in contract on a property.
Yeah. So let's talk about, this was just interesting. This came across our desk today, and it was sales statistics. And
we
we
thought
always
this
want to
was
help
really
grow your
good.
business. Yeah. So
Except we're in the way.
yeah, well, yeah. So we'll move it. So I'm going to put my
That's
glasses
okay.
on. You're really
so that you
fogged
can
up
read
here.
that, because
Yeah,
that's.
'cause really
I'm going to
fun
read
for-
off up here.
Yeah, you go ahead.
Sales statistics for
So-
all of the real estate.
Can you say that
and,
3 times fast?
No,
Sales
no.
statistics. Blah, 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 blah. So
Real
here's the
estate
fact.
and mortgage
You know,
professionals, salespeople in general.
Anybody in life, in
sales.
general, anybody in sales. So 48% of salespeople never follow up with a prospect. That means basically you make contact and you never follow up.
That's a problem.
That is sad.
And you'll see.
So the next
25% of salespeople, they'll make a second contact with that prospect, but then they stop.
and then they're done. It's like,
Yep.
all right, see you, bye. And then 12% of salespeople only make 3 contacts and stop.
Which is, I think, what a lot of people will do. And they'll say, okay, after 3 times, I'm going to give up.
That means 80%.
And only 10% of the people will make more than 3 contacts. Only 10% of salespeople out there will make more than 3 contacts.
So, and just in summary with that, if you think you're going to make a sale on the first time you talk to somebody, you're wrong. There's a 98% chance that that's not going to happen, because only 2% of sales are actually made on the first contact.
And only 3% of sales are made on the second contact.
And 5% of sales are made on the third contact.
10% of sales are made on the 4th contact.
And this is my winner.
Dun,
Where's
dun,
my cash
dun.
register when I need it?
Cha-ching!
80% of sales are made on the 5th to 12th contact. So what does that tell you, DeLynn?
Keep on. There it
Ka-ching,
is.
yeah.
Ka-ching.
So if you're not making
Keep at
contact,
it.
you need to make at least 5, maybe even 12 times you need to
Even
reach
if
out
you
to
think that the
somebody.
person, that you're bothering them or you're annoying them or something like that, you know what? Until they tell you stop.
Yeah, go
then
away.
It does, shoot them, send them a card in the mail, a letter, an email, something like that. Just reach out to the people, because eventually, until they tell you stop.
Yeah, go away.
You're planting that seed and putting it in the back of their head. So.
Yeah. So DeLynn's been asking me to come on the show for years. In fact, 38 contacts. I said, okay, I'll do it. Fine for you, right? Isn't that understand?
Probably.
We'll stick to it. I got a lot of bills to pay, so I said I'll do it. So anyway, let's summarize on we talked about, how much you'll qualify for, how to debt ratio, what's going on in the markets,
Right.
and some good
How much my
sales
payment
tips.
could be.
But
Right.
what's going on in the community, DeLynn?
What's going on in the community? We
Outside
always
of-
have stuff coming up. Let's start with this Friday. This Friday is November.
Can I do my trumpet?
Fiesta Friday.
Yep, it's the last fiesta. So
It is our last Fiesta Friday of the year. So anybody who is local to our offices
or
over there
anybody
in
who
Trinity,
can afford a plane ticket.
you are
Come
more
on
than
down.
welcome to fly on down to us. We have a Fiesta Friday that starts at around 5 o'clock at our office, and it's just very relaxed. We invite anyone in the community, any professionals or whatever. We all work really, really hard all week long. So it's just basically come on by, meet up with some old friends or make some new friends.
And
It's
we
a-
supply it all.
We
All you gotta do is show
do.
up.
Have a drink, have some snacks. We've got some great cooks in our office who take care of preparing some wonderful snacks for us. And it's just open to anybody. Just come on by and relax and have a drink to kick off your weekend.
Yep. So it's a pretty cool thing. I like it.
This Friday
Yep.
at
And
our
then-
office,
and then, of course,
2157 Springs Boulevard in
Trinity,
Trinity.
Florida, 34655.
Right. What else do we have coming up after that?
We have the Grinch event, December 12th.
Yes,
Yeah,
our Grinch
feel
event. We're very excited about our Grinch event.
We're
I'm
always
sure we have
excited.
stuff before then, but that is one
Yeah.
of the things that we do want to get out there the most, because that is a big event. What we do is we take, this is going to be our 4th year doing it. For a lot of you already know about it, but what we do is we take a local family or 2 in the community who maybe is struggling.
We're doing 2.
Medically,
We committed.
in a lot of cases, right? They're struggling medically. We've got some cancer
Yes.
patients who have advanced stages of cancer, and either they have children or they are the child with the advanced stages of cancer. Very sad. But anyway, a lot of times these families are totally disrupted. They really don't have the means or even the thought process of putting a Christmas together for anyone else in the family. So we raise funds to make their holiday special. So it's a big event that we do. It's dinner. You get dinner, you get dancing, we have bands going, we have a DJ going, we have photo booth,
we got contests this year.
Contests, we're going to do contests this year, the ugliest sweater. So if,
I'm going to win.
and
best Grinch look-alike.
Or the coolest socks.
Yeah.
So we got some contests going on too that you could win. So it's going to be a really fun night, and that is on December 12th.
It's a Friday night.
It's a Friday night from 7 to 10.
Yep.
Ish.
Or 11.
We have a lot of silent auctions going on, live auctions going on, a lot of great stuff. If you are a business in the community and you would like to be a part of this and donate, we have sponsorships available that are open. You know, it is a fundraiser for these families. So please, please, please
and you can
reach out to us.
Get your tickets now on www.wpba.biz. Go under the donation tabs on the right side. You'll see it. And get your tickets because it will sell out.
Or reach out to us and we'll hook you up with some tickets. The tickets are only $20 a head. Where can you go? Talk about a cheap date night. Where can you go? Dinner, dancing, and everything for only $20 a person. That is right.
McDonald's and Redbox.
If that, you know, McDonald's is like a fortune these days.
Well, you get the Happy Meal.
I know.
And Redbox, just don't get the Blu-ray because that'll put you over the $20.
But anyway, please reach out to us.
Oh, and if you don't return the movie,
event.
how many people get Redbox and you think, oh, it's only $1.20, and how many days did you keep it for you forgot to return it? Have you ever done that?
No, actually, I've never gotten a Redbox movie.
Really?
I have no idea what it's even like.
Okay, well, let me tell you what it's like. It's cheap if you return it.
If you return it. If
keep
you
it
don't.
in your card. You know.
Kind of like the library book.
That's a good question. Does Redbox count in my debt ratio?
No.
Okay, never mind.
No. However, if they report that you like stiffed them for a movie on your credit report, that's going to be a problem.
Yeah, they'll hit you. So, anyway, that's our show.
That's it. So thanks for watching. Please share the show. Get it out. Facebook, Twitter, LinkedIn, YouTube, all those fun things.
Yep.
Get us out there. Share us around. We appreciate your support. We are today and every day
moving forward.
We'll see everybody next week. Bye-bye.
Have a great week, everybody.